In 2024, if a company made a false claim about being eco-friendly, they faced a PR disaster. In 2026, they face a criminal investigation for money laundering. We are seeing a massive shift in how regulators view the E in ESG under the latest EU Environmental Crime Directive. And the AML single rulebook starting this year, environmental crimes like illegal logging, wildlife trafficking, and carbon credit fraud are no longer just compliance footnotes. They are recognized as one of the most profitable predicate offenses for money laundering globally. So today I'm going to show you how to spot the green money trail in your trade finance data and why your CDD processes need to evolve in order to catch the next wave of environmental financial crime activities. So let's jump into today's video. To understand the risk, we have to look at the scale. According to the FATF, environmental crime generates up to $280 billion in illicit gains every single year. It is the fourth largest criminal activity in the world, growing at a rate of between 5 and 7% every year, far faster than the global economy. But why does this matter to an AML analyst that is based in London, Frankfurt, or even in New York? Because the proceeds of these crimes don't stay in the jungle or down deep in the ocean. They enter the financial system through trade-based money laundering in most of the cases. So if you are financing a shipment, for example, of timber from a high-risk jurisdiction or processing payments for running company with unclear concessions, you are potentially moving the proceeds of crime. So under the AML D6 and the UK Proceeds of Crime Act, if those goods were obtained through illegal deforestation, the money that you are moving is by definition a criminal property. Now let's talk about the corporate side, greenwashing. In 2026, the EU's Green Claims Directive has officially put an end to vague terms, for example, like climate neutral or eco-friendly, without a verifiable proof. If a company raises capital or secures a green loan based on fraudulent environmental data, this is fraud. And as we know, the proceeds of fraud are the subject of money laundering. So we are seeing the first greenwashing suspicious activity reports being filed this year. So if your client is claiming, for example, 50% carbon reduction to get a lower interest rate, but your transaction data shows that they are still paying massive fuel bills to unregulated suppliers, you have a suspicion on predicate fraud. So the Wolfsberg Group has recently emphasized that the effectiveness in anti-money laundering now includes the ability to identify these inconsistencies between a client's ESG public profile and their actual financial behavior. And this is a perfect example of why specialized knowledge is your best career insurance nowadays. Most analysts can check a passport, but very few can look at a bill letting or a carbon credit certificate and spot the red flags of environmental crimes. This is why in the FinCrime Career Accelerator latest version 2.0, specifically in Module 7, on the CDD and risk assurance, I teach you how to conduct sector-based risk assessment. We don't just give you a generic checklist. Within the course, we show you how to build a defensible risk profile for high-risk industries like extractivities, timber, and agriculture. In 2026, the ESG compliance officer is becoming a standalone, high-paying role, and if you want to pivot your career into this specific niche, the accelerator provides the structural foundation that you need to make that transition. So check it out here. I will leave you a link right here on the video and another link you will find in the description right below. So let me bring up now 3 flags for your next investigation. So if you're working in the intelligence investigation unit or the CDD team in your institutions, here are 3 specific red flags that you should be looking for in 2026 and beyond. The first one is complexity in commodity illicit chain. So look for commingling, it's called. This is where illegal timber and minerals are mixed with legal ones. So if a supplier suddenly has a massive increase in volume that doesn't match the known for land concession, that is a red flag for illegal land conversion. Number 2, mismatch pricing in trade. So use the Environmental Crime Financial Toolkit by the WWF to check commodity prices. So if a company is buying premium sustainable cocoa but paying only the price for standard bulk cocoa, they are likely misinvoicing to hide the illicit origins of the goods. And number 3, jurisdictional hopscotch. Funds moving from a deforestation risk country like parts of the Arizona basin through a secrecy jurisdiction and then into a green investment fund. So environmental crime is no longer a niche topic for activists, it's a core risk for every financial institution in 2026 and beyond. The practitioners who understand how to follow the green money trade will be the one that will be leading the most important investigations in the next decade. And if you are seeing ESG risks being integrated into your anti-money laundering programs with the institutions where you are working, or if you had to deal with a greenwashing investigation, do let me know about it. Write it in the comments right below of this video. I would like to hear your voice and your perspective on this topic. So let's build a conversation around this, and as always, if this video was helpful and helped you to understand the 2026 landscape, do press the like and subscribe, and check the links in the video description also for the Career Accelerator version 2.0. I'm Marco Beranzoni, stay sharp, protect the system, and I will see you in the next one.